Hi there, this is Sandra with the Mortgage Center. This is our very first webinar for GDAR, the Guelph and District Association of Realtors. And this is going to be about 10 or 15 minutes and what realtors need to know about mortgages during COVID-19. Now, this was originally taped on March the 30th, and we'll continue to provide updates for you. You can always check out our website at skipthebank.ca, and we're also on Facebook, the Mortgage Center Guelph, and skipthebank.ca for Instagram. Okay, so here we go. So what we'll cover today, what's really happening with closings. So as a real estate agent, you may have closings in the next 30, 60, or 90 days. We'll look at what you can expect with lawyers, appraisers, and also current clients who maybe have lost their job. What about all of those pre-approvals and clients you've been showing houses for in the last few months? What's going to happen with their pre-approvals? Existing homeowners, they're actually going to be in the best shape because many lenders are providing holiday payments so that they don't have to make payments on their mortgage while they're unemployed or on unemployment insurance. And then lastly, we're going to look at what's really happening with mortgage rates. So just a little bit of background on us. Who is the Mortgage Center? Well, we love working with real estate agents, and we have supported GDAR over the last, I don't know, since we've been in business for the last 20 years. But this year in 2020, we are their platinum sponsor. And as I said, we just love working with real estate agents. One of the things you want to make sure you do right now is actually work with a real estate, with a mortgage brokerage who's been through this cycle before. I was doing mortgages in 2008, and I mean, it's a little bit different now, but it's a stress to the market, and you want to know, and you want to work with a mortgage broker who knows how to get things done in this market. You can always email me your questions at lastovic.s@mortgagecenter.com. What I'm going to do is I'm going to compile them and then send them through to GDAR just to, I don't want this to be one-sided. So, closings with firm offers, okay? Lawyers have had the most challenging time, I think, adapting to this, especially some of the larger firms. And what I've found is that normally larger firms require a 2-week turnaround anyway to close on a transaction, just because of the extra stuff that they have to do. But smaller firms have been a little bit more limber in this time, where they've developed systems and processes that allow them to meet with clients virtually, and their real estate clerks have really stepped up. So if you do need a quick closing, mind you, you also have to manage your clients. We do have a good group of lawyers who are we've accumulated who can turn things over fairly quickly. Getting instructions sent to lawyer is now another idea that's very important. Most financial institutions, or some financial institutions, wait until the file is complete, until it is instructed. And we're very cognizant of that, especially with delays on getting letters of employment and the such. So we're mindful if the client has to do a quick turnaround that we would get the mortgage approved with a financial institution that would instruct once the closing package has been signed. So we're mindful of that. Appraisers, on the other hand, interesting. There are many appraisers who are over the age of 60 now, and they're obviously concerned about their health. And you know, like, I think some financial institutions will settle for a drive-by appraisal, but as a real estate agent, I don't know if you'd like to settle for that, especially if your buyer has purchased a property for top dollar. What you want to do is you want to ask for a modified appraisal. And as a seller, as a realtor who's representing the seller, you want to be also mindful that you're going to be getting questions from appraisers about the condition of the property, questions about the inside of the property, and also additional photos from the interior of the house, so that the appraiser can get a good and accurate valuation. Now, as a mortgage broker, we normally can't order appraisals direct, so we have to do it through a third party around because there's been some issues around colluding in values. So one of the leaders in this modified appraisal report system is Value Connect. So we've partnered with them, and they've been excellent to deal with. For those clients who have a firm offer and it's closing and now they find themselves unemployed, the good news is that most financial institutions will honor their commitment if the borrower is eligible for unemployment insurance, because we just know that this is a temporary and hopefully a short shutdown for the economy. But once this pandemic is over, we know that people will be back to work. And I also have read that some people, economists, are predicting a V-type recession, if not a depression. So what that means is that we're going to collapse and then we're going to rapidly increase. So I'm hoping that the collapse won't be too bad, but we're all bracing for it. So clients who haven't bought or sold yet. So this is a neat little cartoon I have here. The sellers are very eager. They're willing to accept payment in lottery tickets and grocery coupons. So, you know, as a seller, you might be concerned about selling in this market, but I have actually had a couple of first-time home buyers last week put offers on properties and with good job security. And they've actually moved forward and didn't have a lot of competition. So they put an offer on the properties at asking price and were able to secure financing. So, you know, it is discouraging for some buyers who don't have good job stability, but also a co-signer is another good option. So if you've been working with buyers and have spent a lot of time with them, they may feel discouraged, but there is also an opportunity in this market because there won't be a lot of competition. Existing homeowners. Oh, here we go. Clients still waiting to buy and to sell. So I've kind of skipped ahead. You want to make sure that they also reach out to their current mortgage broker or lender to see if there is a material change in their application, especially those people if there's a change in their employment status. The other thing I think that we need to be mindful of is that clients get good and clear information. Just in case their existing lender won't pre-approve them, we still have good options. And as I said, you know, sometimes a co-signer is a good option, or even a transitional type mortgage. Existing homeowners with mortgages, that would be me. And I'd say the majority, well, all the people that we work with, but I'd say probably 60 to 70% of the population do have mortgages. They are actually in the best position. And we've got a great website here, and I'm just going to kind of click through this. And you can use this as a resource, or if you're looking at sharing this with your clients, COVID updates on what homeowners need to do. So it just kind of goes through some of the financial effects, what homeowners need to know, what renters need to know, and what lenders are doing right from, because as a mortgage broker, we do mortgages for large chartered banks like TD and Scotia. We do mortgages for credit unions, and then a whole list of monoline lenders and wholesale banks. So it's a great and comprehensive resource, and it's just a great place where people can go and find information. The reason why I also like the link is it lists the financial institution's toll-free number. So if they're not working with a mortgage broker that's currently active right now, have your borrowers call us, because we probably have dealt with that situation if they're a little bit scared, or they can just check the toll-free number on that site here. So this is, I wanted to just wrap up with the idea of what's happening with mortgage interest rates. So as you can see here, this is the overnight lending rate. And a lot of people get confused about this because the Bank of Canada made an emergency rate cut on Friday. And I'm getting questions on, oh, okay, well, if the Bank of Canada is lowering rates, surely my mortgage is going to lower as well. but not necessarily the case. This sort of demonstrates at the beginning of the month, the overnight lending rate was at 1.75, and now it's at 0.25. And the overnight lending rate has a direct impact on the different chartered banks' prime rate, which is at about, I think it's 2.45% right now. And that in turn has an effect on variable rate mortgages. So, and then 5-year fixed rate mortgages are based off the 5-year bond yield. So we know that the yields are going down and the overnight lending rate is going down. Why aren't 5-year fixed rate and variable rate mortgages going down? So why are they going up? Well, this funny little cartoon says, you know, my main liability is that I don't have any money. Well, and that's essentially what's happening with banks, where the different financial institutions who lend money, they're not sure how the government is going to support them as clients ask for payment holidays on their mortgage. So remember, the lenders who lend money on mortgages, they have investors that they have to pay because they've borrowed the money themselves as a financial institution, and then they take that money and then lend it out in mortgages, okay, through mortgage-backed securities. So as a borrower asks for a deferred payment on their mortgage, you know, it could be a month, 3 months, or 6 months, the financial institutions still need to make payments to their investors for the money that they've invested. So I think what is in fact happening is that the financial institutions have increased costs, and because of that uncertainty, they're putting it out in higher mortgage rates, probably higher than it actually should be because of this uncertainty. So that wraps things up. If you'd like to book an appointment with me, you can, I've got a great online tool. You can go to skipthebank.ca and just click on a 15-minute appointment there. Also, you can email me your questions. I will compile them. As I said, I did a presentation earlier on March 30th. I only got one question, and it was actually a correction. So I appreciate that person who messaged me, and thanks very much. So looking forward to having these again, and thanks for joining us.